Rupee had a volatile day in trade yesterday. I think you closed about 0.9% lower at 64.04 or so, but in intraday trade you had fallen even further. The low of the day was about 64.15. It was a volatile day, good or bad. There are a couple of things I want to point out, and Pradeep will jump in on this, but this is the way I look at it. There are three charts. The first chart is crude versus rupee, and these are on two different scales, so when it comes up on your screen, take a look at that. You just take a look at that chart since about mid-September. And since about mid-September, crude oil prices have moved up about 18%. Now, remember, the rupee chart is a reverse scale chart, so when the rupee line, which is the white line, is moving down, the rupee is actually appreciating. The point I'm making very simply is that since about September, when crude has gone up about 18%, the rupee has continued to appreciate. Now, I'll come to the dollar correlation. I haven't forgotten the dollar correlation at all. But just on the fact that the Indian economy is an oil importing economy, that oil imports make a significant difference to our current account deficit, which we've already seen widen to near about an expected 2% of GDP in the current financial year. Gold has played a part, but oil most certainly has played a part. So with oil moving up about 18%, the fact that the rupee has continued to appreciate should rankle, or at least should be notable, and traders would probably do well to take note of the fact that there is some potential lag correction that could come on account of just that divergence between crude prices and the rupee, which would typically depreciate along with rising crude prices, but in this particular case, since about September, has continued to appreciate. Now you'll turn around and tell me that, no, look, it's the dollar index, right? The dollar index is the base currency, and if the dollar index has continued to fall, then the rupee will appreciate. But this is the chart of the dollar index versus the rupee, and I know I'm comparing an index to a currency pair, but I'm just putting those charts out there to give you the comparison. So again, since that mid-September period, the dollar index is down about 1.3%. Now, the rupee has more or less kept track. My simple limited point is that while the rupee will track the dollar, but in a rising oil scenario for an oil importing currency, you should at least not keep pace entirely with the dollar. You should underperform a little bit because you are an importing currency. That has not happened. So if the rupee starts to depreciate at this point, it would be completely justifiable to my mind, because it would simply be paying catch up with the way oil has moved. And now you go back to the first chart and you look at that last leg, what has happened over the last few days, perhaps. And I'm not a mind reader of the markets, but perhaps what you're seeing now, where the rupee has started to depreciate, that little white line upwards, all we are doing is playing catch up with a long rise in crude oil prices, which until now the Indian currency has not reacted to. And the final chart I want to bring up is the Kotak economic research chart, which we brought up on First Word a few days, about a week, 10 days back as well, because they have, sort of charted this out beautifully, making the point that all bouts of appreciation will be followed by longer and deeper bouts of depreciation in the Indian currency. They have a whole list of periods of appreciation and what has followed in terms of the number of days of depreciation and the quantum of depreciation. The simple point being, taking the mean reversion issue, which Pradeep mentioned in a completely different context, that India, an economy which has a current account deficit, and India, which has an inflation differential, should have a mildly depreciating currency over a period of time. Not a short period of time, but a long period of time.